Morning, everybody. It's Brian. Hope you're doing well today. It's Tuesday, 30th of June, and here just to do a quick live update, walk through the various markets that we're monitoring, and see if we have any trading opportunities, or at least look at levels that we might be considering to trade from should an opportunity arise. So we're going to run through what's happening in the forex land, over to futures, and then we'll finish on crypto. In between there, if anything pops into my head as far as deep thoughts, I'll let you know. Typically my thoughts always just kind of revolve around sticking to a plan, focusing on process, and that's pretty much it. So let's go ahead and get to it. We do have some news coming up today. It's important to note that we have a lot happening, really. We've got here in about 30 minutes we have high impact Canadian news coming out. So this is just looking at their GDP and analyzing where that has been over the past month, and seeing what that's going to look like. That could be a market mover for the CAD, especially around this. When you're trading forex, watch for increased spreads on all the Canadian cross pairs. It doesn't mean it will happen, but there's a pretty darn high likelihood that you're going to see spreads go at least 3x of where they typically trade around the announcement. It may be short-lived. Typically those spread variances happen, for that probably 30 seconds leading up to the actual announcement, and then maybe for another 30 seconds or so after the announcement. So it's a really short-lived thing, but if you're in shorter term trades where you're like on a 1 minute or a 5 minute chart where your stops are fairly tight, that spread widening, just the widening of the spread where where market makers are willing to do business, can take you out of a trade without any real movement happening. Just the spreads widen, bloop, and all of a sudden you're slipped 5-10 pips from where you had planned to exit that trade. It could work in your favor as well. It could very easily, the spreads could widen and flip, it hits your take profit point. Could work for you in your favor as well, but it's a very volatile time. I guess that's what I'm trying to get at with that. So be careful there. We've got that coming up. We also have some other things happening here. This S&P composite is based on the home price index. So it's listed as a low impact report, but as we mentioned yesterday, it's a short week. The overall volume is probably going to be a little bit lower than we would see during a typical week. There's holidays. People are taking off for the holidays. Also, there's just a lot of volatility in the marketplace right now. There's so much uncertainty, so much fear that sometimes even a report that seems to be fairly low level can have an impact on us right now, especially when you combine it with the other things that are happening for the day. So, coming up at 8:45 with 9:45 Eastern time, we've got the Chicago purchase index, right? Isn't this purchasing manager index, PMI? Yeah, purchasing managers index. Yeah. These are seen as kind of, this is seen as a lead. They're both seen as leading indicators. Home prices increasing or decreasing tends to be a leading indicator. Purchasing index tends to be kind of a leading indicator of what's expected for the overall economy to do. Then we've got some FOMC members speaking, but the biggie is at 12:30 Eastern when Mr. Powell testifies in front of that Financial Services Committee again. With all these sound bites can kind of drive the market, but especially when things come out of Mr. Powell's mouth, depending on who he's trying to appease with his comments today. Seems to be a pretty honest guy. I don't know. Who's he really working for? I don't know. It's all bullshit. Anyway, depending on what comes out of his mouth today, we could see a crazy burst stronger. We could see the market just turn and rock towards the floor again. It's anybody's guess. No one knows. I'm going to repeat that. I'm going to scream it from the rooftops. If you guys ever think anybody knows what the hell's going on in this market, they're freaking lying to you, and you are oblivious to the actual facts. The market's going to do what the market does. Stop listening to talking heads telling you what's going to happen, because no one freaking knows what's going to happen. I'm sorry, I'm getting on a soapbox and going down a path I don't need to go on, but it drives me crazy because everyone thinks they know what's going on. You got a 50-50 shot of knowing what's going on. You can go on the news and get paid to do whatever and be your talking head, because that's what they get paid to do. They get paid to have an opinion. Their opinion is as worthless as mine or yours or anyone else's, right? Just because they're on TV doesn't mean they know jack shit, because they probably don't. So anyway, no one knows what's going to come out of this later today. All you can do is be consistent and have a plan that gives you an edge in the marketplace over the long term. An edge doesn't mean you win every trade. Gives you an edge over the long term, and you can exploit that edge over and over and over. That's all you can do. You're going to win some, you're going to lose some, but your edge gives you that ability to, when you win more than you lose, and that gives you positive expectancy over the long term. That's the only way to come out ahead of this market. Trying to guess what Powell's going to say and how that's going to impact the market and how the market's going to respond to it, and blah, 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 that everyone wants to point out with their, spreadsheets and theories and whatnot, assumptions. It's meaningless. It's absolutely meaningless. The only thing that matters is having something that you can look at that gives you quantifiable ways to say the market has this bias or that bias, and therefore you're going to go long, you're going to go short with certain key things occurring to drive your decision making, certain quantifiable things that are happening to drive your decision making. That's the only way over the long term you're going to have a consistent and potentially profitable trading life. It is. Everything else, man, if you're just, I'm going down. I don't need to keep going. You know what I'm saying. Anyway, okay, so news coming up. A lot of unknowns happening today, especially around the 12:30 when Powell starts speaking up until, what's that going to be? 1:30, 2 o'clock, 2:30. What do we do with the market until then? Well, let's have a look at that. What do we do with the market until then? So popping over here, let's start with Forex. Over here on the Forex side of things, we don't have a whole lot going on. It's flat, right? We can see that it's flat. As a matter of fact, if we look at, I don't know if all this pops up on your screen or not. If we look across here just to see what's been happening, what's been moving, we actually see that most of our currency pairs have a current range that's far below what their typical ranges are. So everything across the board, typically when we come in at the start of the U.S. session, looking at what's happened in London, we see currency pairings that have moved, 70-80% of what their typical range would be. Some that have already hit that range or slightly exceeded it. Today we're seeing most of the pairs that we're watching at ranges that are far below what their typical range is, and that's represented here as well. We can look very clearly at the currency strength index, this currency strength meter here, and we can see that most of our currencies are trading flat. There's not any real movement. We're going to need some sort of a catalyst to get things going. Those catalysts could be, one, for the Canadian, we have a GDP announcement coming out. That probably will be a catalyst for the Canadian, you think, right? There's probably going to be something there. Don't try to front run it. Don't try to second guess it. The minute it comes out, don't read it, analyze it, and think you know better than what the market's going to do. Just because it comes out, higher than expected, doesn't mean that the Canadian's going to shoot straight up. If it comes out lower than expected, it doesn't mean that the Canadian's going to shoot straight down. Let the market do what the market's going to do. As I always say, we're tiny as retail traders. We're tiny in the marketplace, especially in forex. We're tiny. Don't be the flea on the elephant's back. Don't be that bug that gets in front of the elephant trying to get it to change direction, or trying to second guess what's going to do. You're going to get squashed, right? That's what's going to happen. So let's just wait and see what the market has to offer after the Canadian news comes out, and we may see a move on the cat. And if it does, give it a minute or two after the announcement comes out, and let's see which direction it's actually going to go. And then, quantifiably, if you've got to have some reason for entering, choose the currency pairing based on which currency is being, that's moving in the opposite direction of the Canadian. It's got that good solid movement. Also, be aware of what typical ranges are and where we are in relation to that, which currency pairings are the most volatile, and pair those together in order to give yourself that best opportunity to move quickly into profit, be able to lock some profit in. But don't try to front run it, guys. I just see so much right now. And I guess I get frustrated by it because I see so much with people trying to give some indication that they know what's happening in the marketplace, and it's bought into by, I don't know what it is. I know there's a lot of people right now with COVID, a lot of people at home. There's been a huge increase in the number of people that are actually day trading and are trading from home and are managing their own finances. They're looking at the markets, they're learning about the markets, and that's awesome. I think that is awesome. It's great to take control and be in control of your own future. The challenge is people like little suckerfish. They see people on TV talking about this and that and doing these long drawn out analysis of why this happened and where things are going and blah, 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 blah. And they latch onto that and go, oh, this guy must know what he's talking about. I'm going to follow what he says, and I'm going to trade the direction that guy's talking about the market going, because he must know what he's talking about because he's on name your channel. Now, the person watching another channel is getting a different story from a different person. Another person watching another channel is getting a totally different story from a different person. But the long and short of it is there's people tend to gravitate towards that and lose sight of the fact that those people on TV are just paid to talk. They're paid to have an opinion, and they don't know anything. Well, I mean, I don't say they don't know anything. That's obviously incorrect. They've got education, and they're forming their opinions based on something, but they don't really know what's going to happen next. No one does. No one knows what's going to happen next, and that's why we have to have a quantifiable plan, something that tells us what to do and when to do it based on actual numbers, actual things taking place. And then that plan has to be managed in a way that allows us to have an edge over the marketplace. So anyway, it gets frustrating because I see so much of this stuff going on, and it's just, unfortunately, people buy into it without real thought about the quality or what's being prognosticated and how accurate that is. It's about as accurate as a coin flip. So anyway, what's happening over here in futures land? Starting with the S&P, we're in a mixed bias. The 30-minute bias is long, 4-hour bias is short. What does that mean to us? What do we do with that, Brian? Well, for me, if you have a mixed bias, it means you don't do anything. For other people, you might be trading with something a little bit shorter term. Maybe you're looking at your bias on a 30-minute and a 15, and you're making your decision on a 1. You might have a different story there. But for me, the way I measure and look at the bias is something very quantifiable. Again, quantifiable. It tells me, that I've got a short 4-hour bias and a long 30-minute bias, and that's simply based on where we are with moving average and crosses. Now, some people look at bias and they might use like a 50 simple moving average, and if you're above it, you're long and you've got a long bias. If you're below it, you've got a short bias. Now, there's so many ways to measure that. There is no right. As I always say, there's no right answer. The only right answer in trading is the thing that you're going to do consistently, that gives you a filter and allows you to apply that consistently. That's the only right answer here. So anyway, this tells me sit on my hands. Don't do anything. Sit on your hands until the bias is in agreement. So that means you know, the 30-minute over time, if we keep pushing down, and the 30-minute changes over, once we get into regular trading hours and we have a short bias on the 30, that would agree with the 4-hour, and at that point I can start looking for short trades. But until that happens, I have to sit on my hands and not do anything. We're kind of in no man's land here, really. If we look at the 4-hour levels, you know, we've got a key level at 30.65, and then we have a level down here at that, you know, 30.40 to 30.35 area. Down here, but 30.35 is where my support line is drawn. So we're kind of in between there anyway. So, you know, wouldn't expect much until we got back down to one of either up to a key level or down to a key level that would allow us to trade from. But at this point, mixed bias, so we're not going to do anything. Crude is a long bias again. So we've got a 4-hour that's long, and we have a 30-minute bias that's also long. What we'd be looking at here is a couple different ways to play that. We could either we could wait for a pullback to a key level. So 3,900, actually a whole number here. 3,900, pretty good level. You know, 3,850, another level down here. So we could wait for a pullback to buy off of that, or we could wait for a breakout. So, you know, looking here at 3,950, if we push through 3,950, look to continue long from there. That's another trading opportunity or trading idea based on, you know, trading with the trend, trading with the bias. You know, we'd be looking for long trading opportunities. The other way is one that's kind of near and dear to my heart, which is, you know, waiting for the market to pull back, making lower highs, lower lows, and then trailing our buy entry off the top of that previously closed lower high. So that we'd be going long as it breaks out of that previously closed lower high if it breaks above it. Now, again, there's more to it than that. I mean, you've got to look at obviously the bias. If the 30-minute bias crosses over here, you stop looking for those trades. Number one. Also, you've got to figure out what hours of the day you're going to trade it. You know, being in that, trying to execute that at all hours of the day, not good. You want to trade during times when you've got volume and volatility within that instrument that you're trading. Not all times of day are created equal, you know, so you're going to see, and you can put a volume indicator on your charts and you can see what times of the day you've got increased activity and increased volume, increased volatility. You want to trade it during those times. And that's the same in forex as well. We talk about forex, and sometimes as we're weighing out the different currency pairings, you'll hear me say, and I'll talk about, well, which currency pairings are actually being actively traded right now, because that makes sense. I mean, if you're trading an Aussie versus a yen and you're in the middle of the New York session, neither of those markets are open. How heavily is that really being traded? You want to pick currencies that at least have one side of them are actually being traded right now during the time of the day that you're in. You know, Aussie and Japanese currencies are going to see way more activity during the Australasian session than they are during the New York session, right? It just makes sense. So same with anything else that we're trading, any instrument that we're trading, we want to trade it during a time that we've actually got volume, that we've got other people trading it. There needs to be, you know, other participants in the marketplace, which makes for, you know, that better volatility as well. So anyway, that's a little bit of a sidebar there. But so what we're looking at for crude is we're looking for long positions. We'd be looking for long opportunities until A, you know, we're out of the time frame that we typically trade. B, we have, you know, one of our bias indicators, you know, as far as directional bias, we trade it until that directional bias changes, you know. So that's what we're looking at there. So anyway, pullbacks, you know, 3,900 down, which it's actually just hit it and moved back up, even back to 38.50, or breaks above 39.50, or utilizing that other method that I said. Which one's best? There is no best method. There is no best method. The best method is the one that works for you, that you'll follow consistently is the best method. You know, I don't need to beat that to death, do I? Talking about gold, over here in gold, again, we're in a long bias. The 4-hour is long on gold. The 30-minute technically is long on gold. However, we can see where this is right now. It's pulled back to 1775, which actually is a pretty key area for us here. But this coming into regular trading hours here in the next hour and 15 minutes, if this stays down, down here around this 1775 area, it's very possible that our 30-minute bias will cross over, which would give us a mixed bias at that point. So if we have a mixed bias, that will tell us, hey, we don't trade. But for right now, it is technically still long. So, looking at key areas to trade from, 1775, 1770 if you got that far, but 1775, is a big key area for us. So looking at pullbacks here, breakouts above 1787-ish area up here, 1787 for a breakout to the long side. Or, if the biases stay to where we've got, long bias on both of these, we could be looking for, like we talked about before, lower high and breakout as price moves above that previously closed lower high. So a lot of different ways to approach the market. There isn't any one that's better than the other. It all really comes down to consistency for picking your entry. What filters do you apply to the market? Every indicator you put on here is simply a filter. It's just a filter that you apply to the market that you look through. And if something seeps through all the different filters you have, that's your trading opportunity. If nothing makes it through the filters, you don't have a trading opportunity. It's really simple. As far as trade management goes, size it appropriately. Look at where your risk is going to be, where you're going to place your stop loss. Always trade with the stop loss. And then size your trade accordingly to be no more than, a couple percent of your total account. That's just good money management, right? You want to be able to live the trade another day. You've got to be defensive. We have to have defensive tactics when we're playing. Again, in business, back when I was in corporate America, one of my mentors was always, his philosophy was, the defensive game is what wins. Blocking and tackling. That wins the game. If you've got good defense, offense takes care of itself. So if you're stopping things, if you're stopping that advance. So in this case, over here in trading, if we're using good money management, we're not putting our entire account out there, and we're risking 1 or 2% per trade. That allows us to live through some losses. But then when we have wins that are double or triple what our initial risk is, that's what allows us to advance forward. So there's where your offense starts winning the game, and that works out over the long term. You're always going to have, and I'm going down this long path of multiple things, but that's what it's all about. That's what puts you ahead over the long term. You're never going to win every trade. You're going to have series of wins and you're going to have series of losses, and when you're in those series of losses, it gets tough. Especially if you're not practicing good money management up front, the series of losses can be tough. They're tough already psychologically in your subconscious. They're tough because you start questioning things. But if you've tested a plan and you've really truly back tested something over 100, 150 trades, you'll see that you've got an expectancy of a drawdown. You'll know what to expect. You can see that you might have, even in that back test that you did, there might have been 10 or 15 trades in a row that were losses. If you don't do that exercise, you'll never know. And when you start hitting consistent losses in a row, your subconscious will have you try to abandon the plan because you didn't prepare for that. So anyway, I talk a lot about planning, and we'll probably get to that at another time. And I've been all over the map today with different things that are running through my head. Let's just finish it up and let you guys get on with your day. Over here on the crypto side of things, we are in a downward bias again. So we're looking at Ethereum, we're in a downward bias. Bitcoin, we're in a downward bias. Bitcoin's really kind of consolidating here. ETH hit a low and is pulled back up, but we're still in a downward bias. So what we'd be looking at would be selling opportunities. So price floats up to this 230 area, we'd look to sell off of that. Bitcoin, back up here to this 9170, 9200, we'd look to sell off of that. Keep your stops, fairly close though on both of these, because if it does change direction, it could change very, very rapidly and quite steeply. But for right now, the bias does seem to be continuing to push these things lower. And what we've seen here recently is if the market kind of falls out over in our indexes, over in the stock market, that could cause this to pull lower as well. So let's just be aware. Always trade with the stop and be prepared to be wrong, so that we can get in a new position down the road, that has that continued potential for us. So anyway, that's it for now. I think I've hit everything we've talked about. Forex, we're going to sit on the sideline until we get through the Canadian news. Once we're through the Canadian news, let's start looking at opportunities there. Watch for which currencies are actually moving, and we want to see currencies that are diverging from one another. So whatever the CAD does, if it takes off and starts moving, we want to find a counter currency that's being either, whatever the opposite direction is of the CAD. I don't know what that's going to be. No one knows. We want to be able to find a counter currency to that and pair those together in order to get that quick burst of momentum that pushes that trade potentially into profit, so we can start locking in and then letting the trade move in our favor. From the future side of things, S&P, we've got a mixed bias, so we're going to sit on our hands there until we get confirmation that the biases are moving in the same direction. Maybe that doesn't happen today. Maybe it doesn't happen tomorrow. Maybe we just have to wait until next week. I don't know. No one knows. We're going to do what the market does. We're going to do what the market tells us to do, not what we think might be coming, right? Crude, we've got long bias, so we'd be looking for long opportunities. We talked about what those could be off of key levels. Gold, we have a long bias right now, but keep an eye on it because as we get under regular trading hours in the next hour and a half, about an hour now, that could change. It might be mixed. If it's mixed, sit on your hands. A big part of trading is not forcing a trade. And remember, if we put indicators on a chart, those indicators are there for a reason. They're there to filter what we're looking at. And we should only take trades that make it through that filter system, whatever that might be. All right. So that's it. I'm going to leave you guys here, let you guys get on with your day. If I have, if I take a trade according to one of these plans, especially here in this account that we've been monitoring for this group, I'll post up, talk about what it was and why. If there aren't any trades, we'll just come back in tomorrow. We'll review what occurred for the day and keep moving on. All right. So that's it. Have a great day. We'll talk to you soon. Bye.